We are here at the ANZ today at CT conference, and I have the absolute pleasure to be here with Paul from Deca. How are you today, Paul?
I'm good, thanks, Pauline. Thanks for having me. Hi, everyone.
Thank you, Paul. And Digital Economy Council Australia, for our audience, can you just explain a bit more about that and what exactly you do?
Sure. So I chair the board, and DECA, as we call it, is the peak industry body that represents, I guess, all things digital economy. So that on one side of the spectrum might be global crypto exchanges, and then on the other side it might be a technology business that's trying to solve global supply chain issues with a scannable QR code, for example.
Amazing. And, you just come off a panel discussion. For anyone who unfortunately didn't have a chance to watch the panel discussion, what would be the key takeaways that you brought up today?
Sure. So we were setting the scene for the day's conference, and we were talking about the opportunity and the constraints associated with blockchain and AI and some of these technologies that we're all very excited about those opportunities. As a lawyer, I talk about the constraints, and I think there's political constraints in terms of interoperability between countries, and I gave an example of that in terms of the model law that we've just written for the Commonwealth Secretariat for stablecoins. Not quite rolled out yet. Last year we rolled out the model law for virtual assets, and that is being implemented by 36 countries, I'm told, at the moment. But there's still not yet interoperability because each country has their own value system and they don't always agree to do things together, right? The second constraint is operational, and we talked about that. We see the opportunity, but we can't seize it if these tech businesses can't get bank accounts. And so that's a challenge, and I'll throw that challenge out to every audience I ever speak to. Who's going to solve the banking issue or the banking crisis in Australia and overseas to help these technology businesses get banked? And then you've got the legal regulatory constraints. And so that's the third category, which I guess I spend my world helping solve. So for example, today, I'm helping a global billion-dollar company manage some of its AML/CTF risks. And I'm also meeting in person with a Chinese-speaking business owner who owns a lot of real estate in China and has flown to Australia to help create a real-world asset tokenization platform. And I have to help them navigate the shifting tides of regulatory requirements in Australia, and they're changing. Right now, it's the middle of it's past the middle of 2025, and we're hoping by the end of the year we're going to see Treasury announcing some exposure draft legislation to allow for the regulation of payment stablecoins and other payment functions. We're also looking for Treasury to propose the regulation of digital asset platforms. And once those two changes are announced, there will be probably an 18 to 24 month transition period, but this whole industry is going to have an opportunity to get properly regulated and sort of emerge as, I think from a bank, through the bank's eyes lens, maybe a more legitimate sector. I think it's already legitimate. But anyway, so we're seeing heaps of change, and it's an exciting time to be involved in the industry.
100%, Paul. I think one of the challenges has always been, where's your view on where Australia sits in the global space? Can you give us a bit more in terms of what you're seeing right now, what your clients seeing in this area?
Sure. So in some areas, Australia is leading the way. So what I've been told by people from other countries who run global businesses would be our consumer data right. Our right to our own data is forward thinking, right? Still got problems, but it's pretty good. We are behind the eight ball when it comes to regulating digital assets, stable coins, secondary markets that provide liquidity on digital assets. We are very much behind the eight ball. We have we do not have a progressive ethos or approach from regulators or from the government. I think that's slowly changing. There are advocates on all sides of the political spectrum who really want to see reform in Australia, and so we will get there, and it takes people to actually work together, even competing law firms. We all work together and do submissions together. It's quite fun to be able to see some of those changes so we can actually catch up, because we are falling behind in Australia.
Yeah, thank you. You make such a great point, Paul. I mean, the challenge has always been, how much time do we have to catch up? And if we don't catch up to where the rest of the market's going, what's the real implication here in Australia for that?
So the real implication for that is I have clients right now that are not spending money rolling out products in Australia. They're investing in rolling out products in the US. We were talking on the panel about Tether's issue of its tokenized gold. It got its license in El Salvador, not Australia. Right? And so a lot of businesses doing this, what we would call regulatory arbitraging the world, and then setting up in a certain jurisdiction, launching from there, and then trying to get into various countries by what's called reverse solicitation. So they don't market in, they just see what happens. You can't really do that. In Australia, you might still need a licence. So Australia needs to manage the risk of regulatory arbitrage and come up with really good forward-thinking regulatory frameworks.
And if you could put a time frame on that, or what do you think the time frame would be for that?
I believe in the next 2 years, in 2 years' time, I think we'll have the right frameworks in place.
Well, fabulous. Well, hopefully watch this space in the next 2 years. And, just on the downside of that, if the 2 year time frame pushes out further and further and further, I mean, we talked about, El Salvador and, some other things that are happening. But what does that really mean for businesses on the ground here in Australia?
It means it's harder to raise capital in Australia. I think DECA has put out some numbers, and it's doing a really big report right now with OKX and the DFCRC, which is a think tank, to give more current data on the opportunity here. But our current numbers suggest that there's a $17 billion opportunity for the Australian economy if we really embrace the digital economy technologies. And so the opportunity's here. We'll have to hope that the policymakers listen and put it high on their priority list.
Well, thank you so much for your time, Paul.
Thank you.
So $17 billion opportunity here we're talking about today, and I really appreciate that sharing with our audience.
Thanks for having me.
Thank you so much for your time. Enjoy the rest of the CT. Thank you.
Thank you.